The 2024 housing market continues to not disappoint us.
Are you kidding me?
Okay, note the sarcasm there, just a little bit. This year in particular has probably been one of the most challenging housing markets in recent years, or forget about recent years, in a very long time. There are three things that are impacting the market right now: rising mortgage interest rates, record low home sales, and this never-ending issue with low housing inventory. These factors, well, they could lead to a potential meltdown. In this video, I'm going to dive into these issues and share some articles with you. And of course, I'm going to share some tips with you on how to navigate this housing market for the rest of the year and going into 2025. So let's get into it right now. If you've been watching me for a while, especially this past year, you all know that this housing market is not what the experts predicted it was going to be a year ago. You may recall earlier this year, there were talks about the Fed cutting the federal funds rate several times throughout this year, and that didn't happen. It didn't happen until September. So the market really hasn't changed all that much from the prior years. And now it just seems like things are just even more challenging for the average home buyer. Look, I get it. It feels like that there is just no light at the end of the tunnel. And I feel for you. I do. I work with many buyer clients and they're all having the same struggles. But it's not impossible. It's not impossible to achieve your goal of home ownership. But let's dive into these issues that are going on right now and explain to you what's happening. What's up with these mortgage rates? Yeah, what's up? The interest rates are up. They've gone up since the Fed made that announcement in September that they were cutting the federal funds rate by 50 basis points. Now, while that was much welcome news, it was great, interest rates have crept back up again. In some cases, they're approaching 7%. Now people are freaking out and saying, what's going on? Interest rates are up again, and now they're having a hard time affording that mortgage payment. So what happened? Well, first of all, the federal funds rate does not directly correlate to mortgage interest rates. And I think there's a lot of confusion about that. People feel that once the Feds cut the funds rate, it's going to automatically lower the mortgage interest rates. That is not the case. Mortgage rates follow the 10-year Treasury yield. The U.S. Treasury Department issues Treasury notes or debt obligations, and it has a maturity date of 2, 3, 5, 7, or 10 years. So the 10-year Treasury yield is the rate for a 10-year note offer. The 10-year Treasury yield is the interest rate that the U.S. government, it pays investors for holding the 10-year Treasury bond. Basically, it's an annual return that an investor gets for loaning money to the government. The 10-year yield is often used as a benchmark for long-term interest rates, including the 30-year fixed-rate mortgages. When that yield goes up, the mortgage rates go up. The yield goes down, the mortgage rates come down. Mortgage rates and Treasury yields are influenced by investor behavior. Experts say that not only do we have the current inflation, economic policies, and investor confidence that's impacting the 10-year Treasury yield, we have this other thing that's been looming over us for a while, the U.S. election. Yeah, this election is definitely having an impact on investor confidence. So that's why the rates are the way they are right now. And experts are saying don't anticipate these rates to come down by much by the end of 2024 and even going into 2025. Many experts are saying that the interest rates are expected to stay in the 6% range, and they probably won't drop down below to closer to 6 or even into the 5% range until the end of 2025. So be prepared for that. The next factor I want to talk about is the record low home sales that was just reported in September. Yes, existing home sales in September were the lowest since 2010. Even though the economy is looking good right now, the job numbers are good. Again, we had this looming election over us and the uncertainty. This is what's keeping the home sales down right now. So couple that with the higher interest rates, the high prices. This is why the home sales they're just not there. People are not buying. They're very uncertain about what the outcome of the election is going to be, how that's going to impact not just with buying a home, but how it's going to impact people's jobs and their businesses. So the economy altogether, they want to know like what's going to happen when the next president gets into office. And I just want to say this right now. I am not here to discuss political. I don't care who you vote for. I don't want to hear about it. Please be nice in the comments because I know people do get a little testy in the comments about the politics. Please be nice. Please be nice here. I don't want to have any arguments going on my page, please. I just want this to be a place where people gather information. I don't want any drama. Okay, so that's my PSA for the day. Well, I know this housing market is very challenging right now. There are people that still need to find a home. They still need to make a move. And if you need to get in contact with a real estate agent in the area where you want to buy a home, or even if you're looking to sell a home, please feel free to reach out to me. You can click the link down below, fill out the form, and I'll get back to you within 24 hours, and I will get you connected to an agent in your area. So let's talk about the next factor, which is this never-ending shortage of homes in this country. I found an article on MarketWatch where it talks about this woman, Laura Escobar, who is the president of Lennar Mortgage. Laura was just recently named to be the chairman of the Mortgage Bankers Association. She just spoke recently at their annual conference in Denver, and she had some pretty choice things to say to our politicians regarding this affordability issue and this housing inventory crisis that we're still facing today. Escobar said that the U.S. is short 1.5 million homes and that the country's housing stock isn't keeping pace with the number of households. Decades of overregulation have made it increasingly difficult to build new homes and rehabilitate old ones, Escobar said. For many small builders, it's now close to impossible, and as fewer new homes come on the market, the cost of other homes rises even faster. She also pointed out zoning rules that make it difficult to build more housing in many parts of the country. About 75% of residential land in the U.S. is zoned for single-family homes. Government regulations add nearly $94,000 on average to the price of a new home, according to a 2021 study by the National Association of Home Builders. The costs of labor and building materials have increased by 31% since the beginning of the COVID pandemic. Escobar said she would be bringing the matter to lawmakers and regulators in an effort to lower the cost of housing, particularly by boosting inventory. Enough is enough. My message to every policymaker in Washington is going to be simple. Stop talking about affordability and start delivering on affordability. Thank you, Ms. Escobar, for calling it out and calling out these politicians, because it is so true. And I have been saying this for the past couple of years. You can lower the interest rates as much as you want. It's not going to solve the affordability issue, because it goes back to simple economics of supply and demand. If we do not increase the supply of homes and meet that demand, the prices they're just not going to come down. They're not. Now be aware, and we've seen it before, and when interest rates come down, what happens? It brings out more buyers and it generates more bidding wars. And we're back to the same problem that we had going back to the pandemic when all of this started to blow up. We need to get more houses built. And I applaud Ms. Escobar for calling out the politicians and calling out this problem that it is too expensive for these builders, $94,000 that they have to tack on. $94,000 in government regulations? Are you serious? This is why the homes are so expensive. There needs to be some serious changes to go on here in order for this to get any better. So I really hope that Ms. Escobar can make some headway and make some change here to get these homes built. This is where the problem lies, and this is how it's going to be fixed. We have to increase the inventory to meet the demand of our home buyers. Plain and simple. That's the only way it's going to get fixed. But for now, unfortunately, we are still here. We're still sitting in this problem. It probably won't get corrected for years to come. I hate to say it. So how are we going to navigate this? So as I always say, when it comes to your mortgage rates, please shop out the rates. If you watch my recent videos, I talk about this a lot. Speak with a couple of lenders, get an idea of where their rates are at, what the fees are, shop out the rates, and keep an eye on the market. Keeping an eye on the interest rates on the market, it's going to make you better prepared for when you're ready to go buy the house and lock in on that interest rate. So keep an eye on the rates. And again, interview multiple lenders. If you have the opportunity where you can buy a new construction home with one of the larger builders, such as Lennar, D.R. Horton, Toll Brothers, a lot of these builders are still offering incentives such as credit towards buying down your mortgage, buying down your interest rate by buying discount points. They're also offering some credit towards closing costs. Do your research, look to see what these builders are offering at this time. This may be your best option right now if you want to get a home that's a little bit more affordable with a much cheaper mortgage interest rate. Could all these factors be leading to a meltdown? It's possible. We need to get this inventory issue resolved. In my opinion, that is the biggest thing that needs to be fixed right now. Hopefully, things will start to turn the corner in a positive way coming into 2025. But look, it's something that we need to keep an eye on and watch it on the daily to see which direction this housing market is headed. And hopefully, it'll be more in favor for buyers. And hopefully, the affordability will improve a little bit. Did you know that back in June, 56,000 contracts were canceled in Florida? Yeah, they were. Do you want to know about it? You got to watch the video right here. It's really good stuff. You'll like it. Thanks so much for watching me today to get your dose of real estate reality. My name is Jackie Baker, and I will see you next time.